have business income. Don't you know that the government has provided some special benefits to you? We all know that business income is taxable at higher rates due to the large scale of profit earning. Detailed compliance, maintenance of books of accounts, and tax audits are the attachment if we are involved in a business. If I have a small segment of business and due to demand and supply, my turnover is higher, then is there any tax benefit for me, or do I need to be obliged for large compliance with higher tax rates? The answer is no. A special scheme for those businesses is available where an assessee can take many benefits related to the filing of ITR and tax. And this scheme is known as Presumptive Scheme for Business under Section 44AD. Hello everyone, I am Saloni from Webtel, and in this video I will be talking about Presumptive Scheme for Businesses under Section 44AD. Who is eligible for availing this type of scheme, what type of benefits are available, and also discuss return filing under Presumptive Scheme in ITR-4 as applicable. So stay tuned, and before starting this video, I would like to request you to subscribe to our YouTube channel Webtel Electrosoft to get regular compliance updates. Let's start with the detailed discussion about the Presumptive Scheme under Section 44AD. For this, I am taking you to my desktop screen. Let's talk about the tax benefits available for the small businesses, or we can say that let's talk about the Presumptive Scheme and return filing of ITR-4 as per the Section 44AD. Before opting for the Presumptive Scheme, first we need to check the eligibility for the Presumptive Scheme. As we know that in this video, we are talking about the Presumptive Scheme for business covered under Section 44AD. Any resident, individual, HUF, resident partnership firm but not an LLP firm having a business that has a turnover of less than 2 crores in the previous year can opt to be taxed presumptively. Or we can say that if you are having a business income and having the turnover less than 2 crores rupees, then you can opt for the presumptive taxation scheme available under Section 44AD. However, some exemptional businesses are not allowed for this scheme, and these are as follows. First, a person who is earning income in the nature of commission or brokerage. It means that if you are engaged as a LIC agent, then this scheme doesn't allow you to take the benefits. Second, if a person who is carrying on any agency business, like if you are having a travel agency, advertising agency, public relation agencies, etc., then you can not opt for the presumptive scheme as per the section. Third is related to the business of flying, hiring or leasing of good garages, because it is covered under another section which is 44A of Presumptive Scheme. And in this case, if a transporter has up to 10 vehicles, then this scheme is applicable. Otherwise, a transporter having more than 10 vehicles, then a regular return is applicable. Now let's have an overall detail of presumptive scheme. Firstly, there are 3 types of presumptive scheme which is related to the person or the nature of the business. It means when we opt for the scheme, it is a considerable point that what kind of person and income you are dealing with income tax. If we categorize the scheme, the following are the schemes. First scheme is related to the business under Section 44AD. If you are having the business income, then your income would be calculated under Section 44AD. And if you are a professional, then your income would be calculated as per the Section 44ADA. And if you are a transporter, then your income would be calculated as per the Section 44A. And the person adopting the presumptive taxation scheme can declare income at a prescribed rate. As I have already discussed the logic of the presumptive scheme, if a professional has opted for the scheme, then the threshold limit is gross receipt up to 50 lakhs. If you are a professional and having the income less than 50 lakh, then you can opt for the presumptive scheme as per the section 44 ADA. Now, if we are talking about the taxability of income, it will be calculated like this. If you are having the business income and you are having the turnover less than 2 crore rupees, then you can calculate the tax, or you can calculate your income at the rate of 8%. In case if you have received the income in the cash payments, then your income would be considered at the rate of 8%, and if you have received the income in the digital mode, then your income would be calculated at the rate of 6%. Another criteria is 44 ADA, which is related to a profession. If you are a professional and your gross receipts are up to rupees 50 lakh, then the 50% of your gross receipt would be considered as a presumptive income as per the section 44 ADA. Third is 44 AE, which is related to a transporter, a person who doesn't own more than 10 good vehicles at a time during the year. If you are a transporter and having less than 10 trucks, or you can say less than 10 goods vehicles, then your tax would be calculated as per the section 44A. Now, one more special point to be considered is that every person opted the presumptive scheme is obligated to pay his whole amount of tax in advance. And if you are a person opting for the presumptive scheme, then you need to pay the whole amount of advance tax on or before 15th March of the previous year. And if you fail to pay the advance tax by 15th of March of the previous year, then you are liable to pay interest as per the section 234C. Now let's talk about the compliance obligations. As compliance obligations are the common preparation for all assessees before the filing of return. But there is a major difference between the compliances of regular return and the return under presumptive scheme. Or you can say this is the beauty of this scheme, that with the minimum compliance, you can take all the benefits. So if you are going to file your return without presumptive, then you need to show the maintenance of books of accounts, like you need to show the cash book, ledger, sale and purchase register, etc. Balance sheet you need to prepare, profit and loss account you need to prepare, income and expenditure, depreciation chart, expenses allowed and disallowed under income tax, and computation you need to prepare. But if you are going to opt for the presumptive scheme, then you need to show few details like financial statement, computation, GST details if applicable or available, and the detail of the payment of advance tax. Now let's talk about the computation of the income. If we are going to file the return as per the section 44 AD, then you need to show the gross turnover, or you can say the gross receipt earned during the previous year. So if you have received the income in the electronic mode, then your income would be considered at the rate of 6%. And if you have received the gross receipt or the turnover in cash payment, then your income would be considered at the rate of 8%. And then your net taxable income would be considered as per the section 44A. Another one is financial statement. So in the financial statement, you need to show few details like this: partnership members who are owning your capital, detail of your fixed assets, inventories, secured loans, unsecured loan, etc. And the total of your total assets and liabilities will reflect over here. The persons who cannot opt for the presumptive scheme, or we can say that a presumptive scheme cannot be opted by a non-resident person, the person who is claiming any deductions as per the section 10A, 10AA, 10B or 10BA, and a person who has made any claim towards deductions under section 80HH to 80 RRB in the relevant year. They cannot opt for the presumptive scheme as per the section 44AD. Now, if a person opts out the presumptive scheme, or if a person opts out of the presumptive taxation scheme of the section 44 AD, then he is also required to follow the same scheme for the next 5 years. For example, Manan Arora is a regular taxpayer under presumptive scheme. For the assessment year 2022 and 23, he opts out from the presumptive scheme and files the regular return ITR-3. In this case, he will not be eligible to claim the benefit of presumptive taxation scheme for the next 5 years, that is from assessment year 2023 to 24 till assessment year 2027 and 28. So this is a basic overview of presumptive scheme, how we can file our ITR, or who is eligible for the filing of ITR as per the section 4480. And for the filing of the return, we will talk about the Webby tax solution for the filing of ITR-4. Now let's talk about our Webby tax solution, how Webby tax is going to help for the filing of your ITR-4 under section 44 AD. So this is our Webby tax software, and if we talk about the filing of an ITR-4 through Webby tax software, firstly you need to create a assessee master by clicking on create assessee, or you can use the shortcut key as a F1. And here you need to provide the details like this, as I have already entered the details of the assessee like PAN number of the assessee, name, address details of the assessee, Aadhaar, and here you can enter the e-filing password of your assessee over here. And then you need to select the sources of income. Here you need to select the business or profession, and then you need to click on presumptive for the filing of ITR-4. Similarly, on the page number 2, you need to enter the bank account details. Here you need to enter the name of your bank account, IFSC code, address, type of the account, and then you need to enter the account number of the assessee over here. And if you want to check the status of your bank, whether your bank is pre-validated on the income tax portal or not, then you can check the status by clicking on get bank status. On the third page, acknowledgement details of your assessee will reflect automatically, and then you need to select the nature of the business or profession from the list which has been provided as per the Income Tax Act. And then you can click on save button, and your assessee master data will be saved. Then you need to go to the select company or assessee option, or you can use the shortcut key as F3. Here the list of created assessees will reflect, and then you can select the assessment year for which you want to file your ITR. And then you can select the assessee which is created for the ITR-4. And the detail of your created assessee will reflect on the top of your software. Then you need to go to the balance sheet to fill the financial statements. Here you need to enter the details of your financial statement like this. Here you need to enter the sundry creditors detail, and on the asset side you need to enter the inventory, sundry debtors, and cash in hand details. And if you want to uncheck the mandatory items, then you can uncheck the mandatory items, and other details will also reflect which are related to the financial statements. And then you can click on save button, and your data will be saved in the financial statements. Then you can click on close. And in case if you want to enter the details related to the business, profession, profit and loss account, then you can enter the details of your profit and loss account over here also. Otherwise you can skip the profit and loss account as well. Then you need to go to the computation for filing your details, and here you need to go to the income from business and profession, and just need to click on presumptive business income, and here you need to enter the gross turnover received by the assessee. If you have received the income in the digital mode, then you can enter the details over here, and then your income would be considered at the rate of 6%. And if you have received the income in the cash payment, then you can enter the details over here, and your income as per the section 44 AD will be calculated at the rate of 8%. from your business. Similarly, in case if you want to enter the gross receipt which has been received as per the section 44 ADA under the profession, then you can enter the detail of your profession income also, and your tax would be calculated on your total income received by the assessee as per the section 44 AD, 44 ADA and 44 AE as well. Then you can click on save button. After entering the detail of your gross turnover as per the section 44 AD ADA, then you can click on save button and your data will be saved in the presumptive business income. And here you will be able to see your income would be reflecting in the main screen of the competition. Similarly, if you are having another incomes which are related to the house property or other sources, then you can enter the details of other head of your income over here also. Similarly, you can enter the other head income details like this. And if you are having the chapter 6A deductions, then you can show the chapter 6A deductions as well. And at the end, your income tax will be calculated as per the selected regime. By default, the software will calculate the tax as per the old regime. And in case if you want to change to the new regime, then you can go to the change to new regime option. And if you want to check the comparison of your old versus new, then you can check in the main screen of the software at the end. See, if you opt for the new regime, then your tax would be payable of rupees 15,758 rupees, and if you opt for the old regime, then you need to pay the tax of rupees 16,382 rupees. So if you want to change to the new regime, then you can click on change to new regime and your tax would be calculated as per your selected regime. In case if you want to import the data from the 26 AS, then you can go to the TDS. Or if you want to import the details of your advanced tax or self-assessment tax, then you can click on that. And then you can click on import 26 AS. Here you will be able to import the data of your 26 AS which is related to your TDS, deducted on salary, other than salary. If your tax has been collected, then you can import the details of your tax collection as well. And then you can click on save button and your data will be saved over here. And at the end, if your tax will be calculated, if you need to pay the tax to the government, and if the amount is showing in negative, then you will be able to claim the refund from the government. And the final step is to generate your JSON file. In case if you want to generate and directly upload on the income tax portal, then you can click on generate and upload JSON file. And then your JSON file will be generated. Here you need to click on generate from JSON and then you can click on upload. Here you need to select whether you are eligible for the section 139(17) proviso. In case if you are eligible, then you can select yes and then you can enter the details. If you are not eligible, then you can click on no button and then you can click on save. Now the final step of the filing of ITR-4 is generate JSON. If you want to generate and directly upload the JSON file on the income tax portal, then you can click on generate and upload JSON file. And in case if you want to only generate the JSON file, then you can click on generate JSON and then you can click on generate JSON form over here. A message will appear like this if you want to update the data in the software. For example, if you have made any changes on the income tax portal related to the mail ID, related to your mobile number, then you can update the same data in the software as well by clicking on yes. And in case if you don't want to update, then you can click on no. And then you can select the location where you want to generate your JSON file and then you can click on save button. And then a message will appear like this that your JSON file has been generated. So this would be a process of filing your ITR-4 through Webtel software. I hope by now you must be clear about presumptive income and benefit for small taxpayers who do not want to maintain the huge compliances. Share this video with your near and dear who are running the business and pay excess payment to CA or accountant to maintain books of accounts and other large compliances, or else you can file your return by taking this scheme and with the help of small steps as I discussed in my video. If you want to know more about the tax return filing and our Webby tax solution which I just used to prepare the return of ITR-4, then visit the link mentioned in the description below and let us know in the comment section if you have any doubts. Give a thumbs up and subscribe to our YouTube channel if you found this video helpful. Next Tuesday we will be coming up with another interesting video to make compliances better for you. Till then, stay safe and stay tuned with us for a better compliance journey.